A staggering 240,000 people exited, not over the past decade or something, but in just the last year alone. Where are people really moving today? We'll look at a map. Then, is California's population teetering on the verge of a crash exacerbated by more natural disasters that's all going to devastate its economy? Settle in, because you're going to get some takes that you didn't expect today. Hi, I'm Keith Weinhold, Get Rich Education founder, Forbes Real Estate Council member, best-selling author, and longtime real estate investor. Just another slack-jawed and snaggle-toothed podcaster. Yeah, a shaved mammal with a microphone here. An influx of people creates real estate price and rent growth. The danger is that long-term, you've got to avoid investing in real estate markets where lots of people are moving out, or you'll get destroyed. So we'll look at where all of those places are. Fleeing faster than a bad first date, California's net domestic migration shows that a staggering 240,000 people exited, not over the past decade or something, but in just the last year alone. Basically, 250,000 out. Vamoose, poof, gone. That's more move-outs than the entire population of Boise, which is 235,000. The big winners are Texas, adding 85,000, and North Carolina with plus 82,000 net domestic migration. Now, one of my degrees is in geography, just a humble bachelor's there, so I love it when we can learn from real estate maps. But I also know that those three states have large overall populations. It's more meaningful to see where people are U-hauling on a relative or per capita basis. Okay, now we can see the demographic bloodletting. People are moving out of some northeastern states, Illinois, Louisiana, Alaska, Hawaii, and yes, still Cali. Gosh, California's recent misery of wildfires, mudslides, and the inevitable insurance rate spike, that hasn't even been captured in this map yet. That's become more dramatic than a celebrity divorce. State Farm already tried to get a 22% insurance rate increase in California. Big population winners are chiefly in the nation's southeast quadrant and the Intermountain West. Home prices out west are often too darn expensive as cash-flowing rental properties. And before I get to much more that I've got for you on California and the other big losers, this leaves the Southeast as the best area for income property investors due to this population growth and 5 other key reasons. The Southeast has low property prices with rents that cash flow, laws that favor landlords over tenants, companies lured by tax incentives, an affordable cost of living, and finally, lighter personal income tax burdens too. Now, there's more to this than just move-outs. See, though parts of the upper Midwest have little or no population growth, I'm talking about places like Ohio, Indiana, Michigan, and Missouri, they haven't built enough housing there lately. Well, this is making home demand exceed supply, pushing up their prices in rents anyway. So how could a savvy real estate investor like you position yourself? Over time, get into at least 3 markets for diversification. That might look like 1 in the Midwest for stability and 2 in the Southeast for sweet population growth. And yes, something like that is really general. I mean, you might also be crushing it in something niche outside of this scenario. I mean, medical areas are growing almost everywhere, and it's often good to invest in them. You might provide housing near a growing medical campus, even in a state that's losing population overall, and you're still going to be in great shape. And now remember here, maps can lie as bad as Instagram filters. This one has its limits. I mean, one part of a state is often gaining population while another part of the same state has attrition. And the Census Bureau recently is the one that published all of this. That's where this is from. Understand that this map also does not include births versus deaths or immigration, which actually might be a good thing since the deportee scenario is in flux. The nation overall has less domestic migration than during the pandemic housing boom of 2021 and 2022. For example, Florida saw net domestic migration of 64,000 this past year and a whopping 314,000 back in 2022. But trends and policies continue to make the Southeast the nation's #1 income property quadrant. Before going deeper on California, for those with a 20% down payment for low-cost rental property, we can help you find the right ones and invest in it with our free investment coaching at gremarketplace.com. Just click in the coaching area. Are you willing to consider an opposing viewpoint? I sure am. It's good to look at that sometimes. Now, this map was posted on LinkedIn, and commenter Daniel over there says these states, like the states that are attracting residents, these states underfund societal services like education and healthcare to lure corporations with tax cuts. It works for a little while until the next generation isn't educated or healthy enough to do the job, and the companies move on to the next state for the next tax break. You know, Daniel could have a valid multi-decade view there. Will this scenario still hold up in the year 2050? Nobody knows, but it is the present. All right, well, how about California? Is it about to collapse in the wake of this population loss? Let's look at it, because year after year, the Bay Area especially continues to be a huge job creator. Yes, people talk about job losses, but Bay Area tech jobs, for example, they're also a huge job creator. I mean, Apple, Google, Instacart, Salesforce, Zoom, Intel, every one of those major companies is headquartered in California's Bay Area. And some of those jobs that are created do stay in California, and others leave. So see, Cali is also a top job creator, so they actually can afford to lose more jobs than other states can. I've got more on Cali, but first, if you find this info and these perspectives helpful and you want more of these, go ahead and hit that subscribe button and be sure to hit the notification bell along with that. That's how you're going to be sure to see the next video, because I post tips like these every single week. Now, how about the outlook for Southern California going forward in the wake of the terrible wildfires? And it's not just the area that the fires affected, but all the other areas that weren't burnt, and how insurance companies now increasingly fear can burn. I mean, that is a big question for the state. California still has job growth, and that job growth is going to remain strong, particularly for highly skilled and highly paid workers. You're going to see labor shortages continue for construction trades. That's actually going to worsen. California still can't build enough due to supply constraints and regulatory barriers and land scarcity, buildable land scarcity. After the 2025 SoCal fires, of course, this housing supply is sadly even lower, and you've got to feel for those people. A lot of them want to keep living in SoCal. Their families and their jobs and their kids' school districts are all still there. Well, that right there is housing demand. But an increasing share of the new housing supply pipeline will be in inland markets like Cali's Inland Empire, and there will also be more supply in rentals and in ADUs, accessory dwelling units like little mother-in-law apartments. Southern California's housing market is still one of the most competitive in the nation for both home builders and home buyers, and their severe lack of housing inventory that has elevated home prices and rents, and that will continue. Cali's home price appreciation has been robust. In fact, Orange County, which has over 3 million residents alone, and that includes LA area cities like Anaheim and Irvine, those Orange County home prices increased 7% in 2024. I mean, one of the highest gains in the country, despite what you think is California population loss. You've got affluent new arrivals from other high-cost areas of the U.S., and other parts of the world often come in and replace those that left Southern California. Remember, that map only looked at domestic migration. You've got high income buyers from Asia and India that continue to fuel Cali's luxury segment of the home market too. And just like seemingly almost everywhere else in the nation today, California buyers outnumber sellers in the resale market because homeowners with those irreplaceably low mortgage rates, they remain on the sidelines, and that therefore severely limits the turnover of existing housing stock. Yes, California has a slew of other problems, like their punishingly high state income tax rate north of 12%, on top of that highest federal income tax rate of 37%. But housing demand sure is not one of California's problems. Though California is not about to fall off the planet, I've discussed their homeless and other problems elsewhere on this channel. How about a related opinion? Is California about to collapse? Renowned geopolitical strategist Peter Zeihan and I discussed that right here.